Hello and welcome to Business 360. I'm Shireen Bhan. Here's wishing all our viewers a very happy new year. Hope 2025 is kinder and gentler to us all. Here are the headlines that we're tracking on the first day of the new year. A positive start on the Lal Street. The Sensex gains over 360 points and Nifty up nearly 100. The rupee, though, continues to weaken, ending at a record low once again. Majority of the market participants expect single-digit Nifty returns in 2025, according to an exclusive CNBC TV 18 poll of top fund managers. More than one-third pick financials as the sector to bet on, followed by tech and pharma. Nearly 50% of market participants polled expect the first RBI rate cut in February. Expect the government spending to drive growth in 2025. No one expects GDP growth to cross 7% in FY26. A sober end to what has been a forgetful year for Motown. Maruti Suzuki shines in December as small cars and SUV sales grow. M&M's tractor division sees good growth at the cost of escorts. Bajaj Auto misses expectations but ends at the top of the two-wheeler pecking order with a market share of 25%. The electronic industry calls for simplification of what it calls the most complex tariff regime ahead of the union budget. Also bats for rationalizing the tax on import of components. Sources say electronic exports likely to grow 15% this fiscal, hitting nearly $140 billion. The Defense Ministry declares 2025 as the year of reforms, lists simpler procurement, integrated theatre commands, impetus on emerging technologies like artificial intelligence as priorities. Israel strikes kill 17 people in Gaza on the first day of the new year. Refugee camps are flooded after heavy rains, piling more misery on Palestinians. United Nations says Israeli raids on hospitals have left the healthcare system on the brink. US President-elect Donald Trump reiterates his support for H-1B visas, even as his inner circle remains deeply divided. Trump says America needs smart and competent people, adding, "We need a lot of people coming in." EaseMyTrip co-founder Nishant Pitti resigns as CEO just a day after failing to find buyers for his 14% shareholding in the block deal window. His brother and co-founder Rikant Pitti take over as the new CEO. Grips, chips, condoms and Eno quick commerce companies make a splash as volumes of orders soar across urban India on New Year's Eve. Zepto, Blinkit and Instamart report the highest number of orders to date. Well, let's begin with the positive start to the new year on the Lal Street. The Sensex gained over 360 points and the Nifty added 100 points today in what was a steady trading session. So that's the story on day one of 2025, 98 points higher on the Nifty. The Nifty Midcap index added about 250 points and 200 points higher on the Nifty Bank as well. In the money market, though, the rupee continues to weaken. It weakened by 3 paise against the dollar and it now stands at 85.64. That's the dollar rupee for you, and that's the bond yield as far as the bond markets are concerned, also declining in trade, leading to a spike in bond yields. Getting back to the markets, Jefferies and Kotak Institutional Equities have made changes to their portfolio. Kotak has reduced its weight on ICICI Bank and allocated the same to IndusInd Bank. It has removed Britannia from its portfolio and cut the weight on United Spirits. It has instead allocated this to Dabur and GCPL. Finally, Kotak has increased its weight in Adani Ports and Cipla. Let's talk about Jefferies. Jefferies will reintroduce HDFC Bank with a 4% weightage by reducing its investments in Macrotech developers, L&T, ICICI Bank and Axis Bank by 1%. The brokerage firm is also betting on Siemens with a 4% weight by removing its investment in AU Small Finance Bank. So that's the portfolio reallocation there for Kotak and Jefferies. So where is the Nifty headed in 2025 and what should investors expect? Now, we at CNBC TV 18 polled more than 60 fund managers, high net worth individuals and dealers for their outlook on the new year. A majority of them expect modest returns. Financials emerging as the top sectoral pick. Nimesh is standing by now to take us through what the poll is highlighting. Nimesh.
So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks. which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned. The other important factor was the rupee. We had a record year as far as rupee is concerned. So we asked the question as to will that be a spoilsport into 25 as well? Most of the experts believe that the rupee is going to be ranged between 85 to 87 a dollar, while a small segment expects the currency to appreciate below 85 as well going into 2025. Also, we saw a new RBI governor taking charge, and that the first policy will be in 2025. So we asked the experts what to expect in terms of RBI action. It's a divided house there. 50% believe that the first rate cut from RBI will be in the Q4 of this financial year. However, a small portion believes that the stretch line could be as late as the third quarter of FY26. So that's the RBI action. Indeed, if the RBI has to cut rates, then how much is the rate cut that the street is penciling in? Half of the respondents, which is 50%, believe that the rate cut going into 25 would be at least 50 basis points. So 50 to 75 basis points is what a lot of people are betting on. So that's the rate cut expectation going into 25. In fact, 24 was a very volatile year. We had a budget, we had general elections, multiple state elections, and so on and so on. But 25 could be a year of moderate returns, but the expectation is that the positive returns would continue going into 25 as well. That's the big poll from CNBC TV18.
It looks as if FIs are selling, but they are effectively selling their current holdings and buying into IPOs and QIPs, which means they are also, in some sense, changing their portfolio. One, which is what we call high confidence in reasonable return, which is these HDFC Bank or ICICI Bank or these big IT companies. You're not expecting to make 20-25% return, but you hope to make in high double digits, maybe 15, 17, 14, depending on the market.
Well, that's the big market call, a fund managers poll of over 60 fund managers and high net worth individuals on how they expect the markets to pan out through the year. Now, it's been a sober end to what has been a largely forgettable year for India's automobile industry. Maruti Suzuki small cars and SUV sales registered growth in December. M&M's tractors saw steady growth at the cost of Escorts. Bajaj Auto missed street expectations. Rima standing by now to tell us more about the auto sector's year-end performance. Rima, how did we close 2024?
So Maruti stood out, and here it's because the small car segment, which has been under pressure, has rebounded. So Maruti's total sales went up by 29.6%, and here the mini and compact cars have shown a 29% growth, albeit on a low base. That said, small cars are still down 10% for the period of April to December, but in December we have seen a pickup. The SUV growth remains intact for Maruti, up 21%. Bajaj Auto, on the other hand, is a disappointing set of numbers. Total sales are down 1.1%, lower than street expectations, but exports are doing well. The export contribution has now risen to nearly 50%, and it's been steadily rising for Bajaj Auto. And the electric two-wheeler performance has also been very strong and ahead of peers. Vahan data shows that Bajaj Auto is now the market leader with a 25% market share. M&M too has done very well in the month of December, both passenger vehicles and tractor. So passenger vehicle growth has been in line with expectations. Here, it's the SUV segment for M&M, which continues to shine with a growth of close to about 18%, and tractors Tractor growth at 20% is ahead of its peer, Escorts, where for Escorts, the December tractor sales declined by 10%. For Hyundai, performance is in line with expectation. Total sales are down 2.4%. They acknowledge that things are still challenging. But for Hyundai too, the domestic performance has been better than exports. And for the full year, they've ended with a domestic sales growth of 0.6% for 2024, which is the highest ever.
Rima, many thanks. Now, less than a month to go for the union budget, the electronics industry has called for simplification of what it calls the most complex tariff regime. In a letter to the finance minister accessed by CNBC TV18, the India Cellular and Electronics Association has called for rationalising the tax on the import of components. Ashmit is standing by to take us through the specifics of the demands for different categories. Ashmit, what kind of simplification are we talking about?
Well, the first and foremost, the issue that has been highlighted by the ICA is that the current structure, which features as many as 6 slabs, and that's not counting the surcharge, is a complicated one, leads to interpretational issues, leads to confusion. And therefore, the solution that has been recommended by the ICA is to have a simpler framework where there are 4 bands in place, 0, 5, 10 and 15%, which will allow for ease in interpretation and therefore give relief to the industry. But this, of course, is a structural reform that the ICA is seeking. On the other count, however, they've sought a number of duty reductions as well within the current existing framework. This is in line with the recommendations that have been coming from the industry that India, when compared to geographies such as Vietnam, Thailand, Mexico, faces a competitive disadvantage with those geographies offering lower duties. So with that in mind, there are various duty reductions that have been recommended by the ICA. Number one, for mobiles, a lot of sub-assemblies and components attract a 2.5% duty that is sought to be brought down to 0. That's one recommendation. For TV manufacturing, to encourage TV manufacturing domestically, locally, within the country, again, there are sub-assembly inputs for open cells, which also attract a 2.5% duty. That is sought to be brought down to 0. Another key recommendation that is made by the ICA is that in 2022 budget, there was a phased manufacturing program introduced for hearables and wearables to attract investments here, to attract manufacturing here. Those incentives that were introduced are expected to clock out by FY26. The ICA is seeking an extension of those benefits, given that the industry is in a nascent stage and requires more support going forward to help build scale. And finally, as far as the auto space is concerned, the car displays, various components of that attract a 15% duty. This again is an opportunity that the ICA bats for and is saying that to actually grow there, to grow manufacturing in that space, again will require incentive with benefits by way of at least a 0 duty structure for enabling more display manufacturing within the country.
All right, Ashmit, appreciate you joining us. Now, electronic manufacturing is expected to clock $135 to $140 billion in FY25. This is a growth rate of 15% in dollar terms and 45% in rupee terms compared to FY24. Sources have told CNBC TV18 that domestic demand is likely to remain flat this year, and it's also likely to impact total production. Prime Minister Modi set a target of $500 billion in electronic manufacturing by FY30 for the industry. Now, the first Union Cabinet meeting of 2025 has approved new measures for farmers. The government has enhanced the allocation of the Fasal Bima Yojana to more than 69,500 crore rupees. The Cabinet has also cleared extra fertilizer subsidy of nearly 3,900 crore rupees, calling it a one-time special package. The Cabinet also approved setting up an 800 crore rupee fund for innovation and technology. The Tamil Nadu Power Distribution Corporation has scrapped a global tender floated for procuring smart meters by Adani Energy. The state government claimed the company quoted high costs despite emerging as the lowest bidder. This development comes after Gautam Adani was indicted, after the Adani Group was indicted by a US court with fraud and bribery charges in November. That is the latest there in the Adani saga. Moving on, Defence Minister Rajnath Singh has said that 2025 will be the year of reforms for the sector. The Defence Ministry has listed simpler procurement, integrated theatre command, impetus on emerging technologies like artificial intelligence as its priorities. Parikshit is standing by to take us through what the ministry has planned for the year ahead. Parikshit.
Well, the Indian government has been seeing defence as a standout sector in terms of manufacturing and exports. In FY24, we attained a milestone of a record 22,000 crores in defence exports, and the aim is to take this to 50,000 crores in exports by FY29. So there are about 9 or 10 steps that the defence minister has announced, and these are steps where there will be a lot of action in terms of reforms and simplifying the sector. One, of course, is encouraging and bolstering preparedness for jointness and integration of the three services and facilitate establishment of integrated theatre commands. A lot of defense experts have been writing and calling for integrated theatre commands. There will also be more focus on domains such as cyber and space, emerging technologies like AI, machine learning, hypersonics, and also procedures required to win future wars in all these areas. So there will be a reform push and a nudge to the industry as well. Developing a shared understanding of operational requirements and joint operational capabilities through inter-service cooperation and training. Acquisition procedures would be made simpler and time-sensitive to facilitate swifter and robust capability development. This has been a long-standing demand of the industry and facilitate faster technology transfer and knowledge sharing between the defense sector and civil industries as well. So on the whole, the idea is to bring in more efficiency in the system, have faster technology sharing and knowledge sharing agreements, and make the acquisition process faster as well. Remember, India has a target of achieving 3 trillion in defense production by FY29. Our annual defense production was a record 1.27 lakh crore in FY24, up 16.7% over FY23. So defense continues to be a big priority sector, and this meeting held by Rajnath Singh on New Year's Eve was a step in that direction.
All right, Parikshit, many thanks for joining us. The shares of EaseMyTrip under pressure today after the company's CEO Nishant Pitti stepped down on account of personal reasons. His brother and co-founder Rikant Pitti has now been appointed as the new CEO. And this move comes just a day after Pitti failed to find buyers for his 14% shareholding in the block deal window. Hormuz is standing by now with the details. Hormuz, it's getting curiouser. Nishant Pitti had decided to offload his entire remaining stake in the company via that block deal, didn't get picked up. Meanwhile, he's decided to tender his resignation.
Today, the big development that came in earlier this morning was the fact that Nishant Pitti has resigned as the CEO of the company with immediate effect, and he has cited personal reasons for the same. And Rikant Pitti, one of the other co-promoters of the company, has been appointed as the CEO in his place. Now, Nishant Pitti has been on the board of EaseMyTrip since 2008, while Rikant and Prashant Pitti, the other two co-promoters of the company, joined the board in 2011 and 2016, respectively. Now, Nishant Pitti has not cited any further reasons as to what led to this resignation. He has only mentioned personal reasons in his resignation letter. But now the top management looks like this. He's resigned as CEO, but he remains chairman. Prashant Pitti remains managing director, and now Rikant Pitti, who was earlier the executive director, now takes charge as CEO and co-founder. Now, Nishant Pitti's, the news, the stock has been that the fact that he was planning to sell 14% stake, but he could only manage to sell 1.4% on Tuesday, while the remaining stake remained unsold. So there is no clarity on what happens to that now. And he had also sold a 14% stake earlier in September and another 3.5% back in June of 2023. So some stake sales from Nishant Pitti there, and his other business interests also have kept the stock in the news, be it partnering with Ajay Singh to bid for Go First and then pulling off out of that bid, the foray into electric vehicles. And some interesting bit is the fact that he has also been a co-producer of a lot of Bollywood films, be it the likes of Fanne Khan of Batti Gul Meter Chalu, or even Manikarnika as part of his branding initiatives. So for now, the big news that has come in, the fact that Nishant Pitti has resigned. There is a new CEO at the helm, but what happens to his remaining stake still remains unclear.
All right, Hormuz, many thanks for joining us. We will head into a short break, but up next, quick commerce companies cash in on the New Year celebrations across urban India. That and more when we get back. India's quick commerce companies made a splash on New Year's Eve as Indians ushered in 2025 with their near and dear ones. There was an inordinate rise in demand for grapes, chocolates, milk and even condoms, Eno and underwear as urban India planned their party and after party. Shilpa joins us now to tell us how Q-commerce companies celebrated as Indians partied on New Year's Eve. Shilpa.
Well, it's been yet another record-breaking night for quick commerce platforms as India's consumers took to their phones to order in all their New Year party needs. Apart from the usual party essentials, many interesting items made the list, like grapes, condoms, Eno, milk packets, and even men's underwear. And these were ordered in huge quantities. Now, across apps, but let's look at Blinkit first. It saw its highest orders in a day, highest orders per minute and per hour as well. And in terms of trends, last night saw the most amount of chips and the most grapes being sold in a day. Now, the biggest order on Blinkit received was from Kolkata for 64,908 rupees. Now, Instamart saw its highest ever orders, which was the double of last year. And consumers, what were they looking for? Milk, chips, grapes, chocolates and paneer. And the biggest order came from a user in Goa for 70,325 rupees. Now, on Big Basket, orders for things like games, soft drinks, mixers, etc. were up anywhere between 200 to 1,300% up. And after 2024 turning out to be the year of the quick commerce boom, Zepto CEO Adit Palicha rang in the new year with 3 predictions for 2025 when it comes to the quick commerce industry. He says that 2025 will be the year where quick commerce will start hitting scale comparable with e-commerce. Now, we've already seen the lines blurring between the two in 2024. Now, the second prediction is that this year, quick commerce model will really be put to test. Succeeding in this scale will require exceptional execution, he says, which will be a challenge for every single player to be able to deliver. Thirdly, he says that the fundamentals of quick commerce will evolve dramatically and the unit economics to build operating leverage will also change. And finally, as Zepto gears up for an IPO this year, Palicha says that the capital market environment from private to public will also be very different compared to 2024 and 2023. So from a year of its boom to a true test of its scale in this year, it will be interesting to see how quick commerce evolves in 2025.
Right, Shilpa, many thanks for joining us. That's what India ordered on New Year's Eve via quick commerce companies. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Do stay tuned. We're back in a moment with more.